Hey everybody, Zach here. I'm happy to be giving a update on Defi Gravity investments and to give an update on what's been happening in the crypto world. In the last video about 3 months ago, I gave some specific predictions for 2024 and a very general positive outlook for what I expected in this year. In this video, I'll cover what those predictions, whether they've come to fruition, how they've fared, and cover all the things that are coming down the pipeline. About 3.5 months ago or so in that video, we were sitting at around $13 and change for the price of Chainlink. And today we're trading at $18.60. At the time of the video, I said that I expected a significant run up not only in Chainlink but in the crypto markets in general. And as you can see, that did occur. In the past, it was rare that I would actually give predictions on price specifically, but there were a lot of reasons that I felt like we were going to experience a strong run up, including where we were in the cycle, in this 4-year crypto cycle that we often experience, And since that peak that we hit, so we hit around a $22 Chainlink or so, and that was in March. We had a subsequent large drop in prices, and we were reached down right back to that same spot of around $13 and change. Since then, we've had a reaccumulation, and we're now back at the price I had mentioned. Here's the Ethereum chart, and you can see about the same spot that was beginning of the year. We have a price trading at around $2,200 or so, and after that update, we had the expected run up that I was looking for, peaking at around $4,000 for the price of Ethereum. Then a subsequent large drop right back down to around $2,900, still $900 or $700 and change higher than the time of the video from last update. And then this very abrupt large gain that we've had just a couple weeks ago. And we can talk about what this milestone was specifically. I'll just mention that it was the approval of the Ethereum ETF. The big news in last video was that there was an approval for the BTC Bitcoin ETF. As a reminder for those who aren't familiar with it, an ETF is an exchange traded fund. It's essentially an asset that you are going to see in your traditional brokerage account. It means that the average or traditional investor can hold Bitcoin assets in their traditional brokerage account, much like they hold any other S&P 500 ETF or a gold ETF, for example. The average daily inflow to the BTC ETFs has been extremely positive. It's put a lot of buy pressure on the BTC asset, and there's actually been a supply shock, a scarcity of the asset. So that's really pushed the price up, and 97 million per day is it's a lot more than was probably anticipated. To give you an idea of what that inflow has been like, we can take a look at how it compares to the daily transaction volume of all gold ETFs. And you can read here, the Bitcoin ETFs, which began trading in January of this year, held $43.2 billion, while gold ETFs held $92.3 billion. That's a fairly current number. So they've only been around for 5 months and change, and the total volume in the total amount of assets in those ETFs is almost half of gold already, which has been around for decades. So there's really been 2 major milestones that have been pushing the price of Bitcoin and the crypto markets up through this bull run and through these last few months. One is the BTC ETF, as mentioned, and second would be what's called the BTC halving, which I'll go into very briefly in a moment. And you may have experienced looking at your account statements or just following crypto prices that you were saying, oh yeah, it does look like, you know, we're in this bull run and prices are running up just like Zach was predicting and this and that. And then you might have lost some, some confidence in it when, we hit that 72K mark and we abruptly dropped right under 60K pretty quickly. But what I'd like to point out is that every bull run in the past, during the bull run, has had several fairly large corrections before it continues to rise up. And let me show you some of those charts. I'm going to show you this chart of these 4-year cycles that we've had throughout the history of Bitcoin and throughout the history of crypto. And before I jump into those, you might ask yourself, well, why is this 4-year cycle so magical? It sounds very arbitrary, doesn't sound like it has much founding to it. But the 4-year cycle is based solely around the BTC halving. And you can ask yourself, what is BTC halving? I'll read directly from this. A Bitcoin halving event occurs about every 4 years when the reward for mining for the miners is cut in half. Halvings reduce the rate at which new coins are created and thus lower the available amount of new supply. So every 4 years, the amount of supply of BTC, which is already finite, reduces during the BTC halving. And when you have a reduction of supply, the price increases. We just recently had our BTC halving just a month or so ago. And these are the cycles every prior halving. So you can see that you have the bear market that we were just in, last year and the year before. And you have this large drop, you hit the bottom, then there's kind of an accumulation stage where it's not feverish pace up, but you are gaining traction and prices increasing, and then catapults in price. But do notice that during this bull run, which is, very, very, significant, you have some enormous drops in some of them, right? You have a point here, I don't know this timeline in 2011 or 13, but you have a point here where you drop from this point to here all the way down to here in, looks like, probably a matter of weeks. And then a continued and then almost asymptotic rise here, right? And every cycle is actually surprisingly similar, right? It doesn't mean, and I don't believe that every cycle is going to continue indefinitely. Things will change. The markets will mature. More institutional investors come in. The size of the crypto market gets larger, so it becomes more sophisticated. It becomes more entrenched, so you're not going to get those violent swings as much. But you still are going to see this trend for at least a few more cycles to some degree. Here, same thing. Bear market, accumulation, large bull run with several large corrections in between that when you zoom out don't look large, but when you're in there, you're like, whoa, that's a 30% drop in a few days. Same thing here, right? And then if you jump down to 2024, we were at the end of that bull run, okay? Then we hit this large bear market that we were in, and now we're in this accumulation stage, and it's going to be interesting to see where this bull run continues to be, how much it's going to look like next. All these other prior cycles. If it looks anything like the prior cycles, then just understand each time we're around here, right? We're going to be multiples higher than what we are right now. This chart here is somewhat similar, but it shows the timeline of the exact halvings for Bitcoin and what the price action is after the halving. You'll see there's always been a run-up pre-halving because it's a known timeline. It's known that it's coming. So it's kind of buy the rumor, sell the news type thing for a little bit, right? There's an accumulation, the halving occurs, then there's a drop, and then that's the kind of the catalyst for the large bull run, right? That was in the 2016-17 cycle. Then you had the bear market. Same thing here. These red lines are the halvings. You have a halving, then a kind of steady kind of crab crawl across, then large run up. Bear market, some accumulation. Here we are, 2024. We just had the halving and we experienced some drop off. And this is not an updated chart. We're probably actually kind of around this curve right here. And it'll be great. Well, hopefully great. It'll be interesting and hopefully great. And I think great to see what this bull run will bring. So the BTC ETF approval and the BTC halving and the adoption of technologies of crypto are all great. They're all strong, and I think an enormous force that will bring the prices of crypto up. But what I mentioned just a few minutes ago is another real milestone that's going to change things, and that's the Ethereum, the ETH ETF approval. So that is a big step, not only for Ethereum itself, but what it signifies is that it's a symbol for all the other crypto assets that will gain their own ETFs in the future. It also shows that there's a hunger and an appetite by investors to be able to not only invest in BTC, but to invest in other crypto assets. It legitimizes the asset class, and it also makes it very streamlined and less friction and comfortable for traditional investors to participate. And that occurred on just a few days ago. At May 23rd, Ethereum ETF was approved. And that was a real, not a shock in general. That was actually one of my predictions in the last video, if you recall. I said that I thought we'd get it sometime this year. I also said that I thought we probably would not get it in May. May was the first deadline for, the first deadline where the SEC had to approve or deny applications for the Ethereum ETF. And I thought it would get denied at that point. And then after the video, it seemed the sentiment was kind of like a coin flip whether it was going to happen around that on this deadline. But then after the video, it became very unlikely was the sentiment. There was a lot of news, or actually lack of chatter from both parties, both sides. It just seemed like it wasn't going to happen. And then there was a very abrupt 180 on the chatter around whether it was going to occur, and it was actually approved. And that is a good segue. So the Ethereum ETF being approved does all those things I mentioned, and then obviously it does a lot for Ethereum itself, right? That same supply shock that BTC was experiencing, I believe that will occur for Ethereum now. And at minimum, it creates buy pressure. As long as there's inflows into the Ethereum ETFs, that means that more Ethereum is being purchased and taken off chain and held by these custodians, like, the large bank custodians that are running these ETFs. That takes away supply. Price should increase because of that, and it has. That was that abrupt uptick you saw just about a week ago on that chart. And Ethereum is our second largest holding in the fund, so it speaks really strongly to Ethereum in itself. But that's where I want to segue. Why did it get approved all of a sudden when it seemed like it wasn't happening? And that's from a very strong political shift that's occurred with crypto. And crypto has become a mainstream national subject, especially in these elections upcoming. I don't know if you recall, but for years I've been discussing that one of the bottlenecks for massive adoption of crypto by large institutions and also by the average day investor is regulation. So the main institutions that have a lot of interaction with individual customers, they need to have some real clear guidance on how they need to operate with crypto. They can't take any risks about being non-compliant, and it's just been a very slow-paced progress with a lot of frustratingly slow adoption of new laws and just clarity. So that's been an issue for years, but what's happened in literally just the last couple weeks has been just a catapult or just a surge of energy put in and attention put into laws around crypto, regulation around crypto, and just political attention and making it at the forefront. And I'm going to play this video for you, which I find actually really interesting. But just keep in mind, well, the support politically for crypto has always been more Republican than Democratic, and that still remains, but we've had a few key Democratic figures, including the president, but one that's very anti-crypto and actually orchestrating like an army of anti-crypto sentiment and groups, and that would be Elizabeth Warren. But now you're seeing the Democratic Party kind of play catch up. They're realizing that this is really kind of pushing them to the outside, and that there is demand by the average person for crypto, and there's demand by the institutions to have it regulated, and they're kind of realizing, well, all right, we actually need to change this immediately. So I think it's pretty wild that even 6 months ago, for sure a year ago, but even 6 months ago, you would have never dreamed of hearing presidential candidates right before election making and speaking about crypto in a big way.
I will ensure that the future of crypto and the future of Bitcoin will be made in the USA, not driven overseas. I will support the right to self-custody to the nation's 50 million crypto holders. I say this with your vote.
Donald Trump just delivered one of the greatest presidential pro-crypto speeches of all.
And regardless if you're pro-Trump or pro-Biden, or even if you don't necessarily believe that Trump will follow through with these and it's just, it's just marketing for votes, that's really kind of not the point. The point is that crypto as a subject, crypto as a market is important enough that Trump is making it and highlighting it enough to gain votes, which really indicates the demand for it. And that demand that is there and that he's reacting to is now forcing Democratic Party to play catch up and reverse their and pivot their positions on how they've been acting towards it.
And that's different than Biden.
President Biden signed an executive order today directing the federal government to come up with a plan to regulate cryptocurrency.
Listen to the full speech. This literally just happened. Then we'll talk Biden, then we'll talk Kennedy.
And I will also stop Joe Biden's crusade to crush crypto.
But in the year of a U.S. presidential election, you have no idea how big crypto is about to be.
I will keep Elizabeth Warren and her goons away from your Bitcoin. And I will never allow the creation of a central bank digital currency.
And then, of course, Joe Biden playing a little catch-up. He probably will take credit for the recent Ethereum ETF that was just approved.
Our view is that that was a political shift. It was a shift in D.C., whether it was the Biden admin or higher-ups in the Democratic Party. It doesn't really matter. As far as we're concerned, this was a shift politically. You can see that with a lot of the votes that just happened in D.C., Trump going pro-crypto.
Now, this is major. I give Biden full credit. I'd give Trump full credit. I give any political candidate full credit if they want to put in real policy that helps all Americans.
And it's not like you gain any voters by being anti-crypto. Those people would vote for the Dems anyway. But you lose some by being so anti-crypto.
After all, crypto shouldn't be a one-party issue. Watched.
I mean, is there precedent for this happening? And does it really just work like that there can be some sort of political shift and just like that, the SEC just does a 180-degree pivot? I mean, it just seems bizarre to me.
Crypto policy is being...
So you've seen the real political shift all the way at the top at presidential candidates towards crypto. And then on the actual kind of meat and potatoes, the actual policies, there's been a shift there as well, right? So there's been repeals of kind of constricting legislation that makes it very difficult for the large banks to hold Bitcoin and other crypto assets as custodians. I won't go into the exact details, but some of those have been repealed, or at minimum there's been motions to repeal them and support for that. And you have ABA, which is the American Blockchain Association, with a lot of money behind it now, urging Biden to overturn SEC treatment of crypto custody assets. So the SEC in the last couple of years has been it's had a crusade against crypto, which is really, it's interesting because a lot of it has been, the force behind it has been Elizabeth Warren, who just has like a crusade to take out crypto, which will not occur. And the appointment of the SEC chairman is Gary Gensler. If you're not familiar with Gary Gensler, well, I won't hide the fact that I think he's an absolute weasel. Kind of creeps me out. But he is somebody who's really, as soon as he was brought on as the SEC chairman by Biden, he had a real shift from his original thoughts on crypto. He became very anti-crypto, going after every crypto asset, every crypto company, every crypto exchange like Coinbase, on a crusade to not just regulate, but to stifle innovation. And this is from somebody who actually originally was an MIT professor on cryptography, on blockchain. And specifically where you can see that there's just a total disconnect to what he believed just a few years prior to what he would not be willing to say, in judicial hearings. You'll see this. So this is a excerpt from one of his MIT classes where he specifically says that he believes, and the SEC believes, that Ethereum is not a security. The reason why that's important is that was the determining factor whether Ethereum ETF could be approved.
Called the Ethereum Foundation, and the other 80% was sold to the public for $18 million. We'll talk later in the semester as to whether that was really a securities offering. I've publicly said I think so, but that was in 2014, and in 2018, the Securities and Exchange Commission has said, regardless of what it might have been in 14, it's now sufficiently decentralized that we'll consider it not a security.
So that clip comes from just 2019, where he says definitively that the SEC views Ethereum, or ETH, as a non-security, a commodity. And then this is just from, I don't know, about maybe 1 year ago, I think, something like that, where he is asked point blank what classification he believes ETH is, Ethereum. And he refuses to answer the question.
Okay, so do you recognize, how would you categorize Ether then?
Look, I think that the general sweep of what Congress did, not just in the 30s, but as amended.
I'm asking you, sitting in your chair now, to make an assessment under the laws as exist, is Ether a commodity or a security?
Without speaking to any one.
I know you've repeatedly said you're not going to speak to one, except you've spoken to one, Bitcoin. So I'm asking you to speak to a second one, the second largest market cap here.
And speaking to the tokens, there's 10 to 12,000. If there's a group of entrepreneurs in the
I'm asking
middle,
about one.
The public is anticipating a profit based on the...
I'm asking you a specific question, Chair Gensler. I said this in private. This should be no shock to you. I'm asking this question. Is Ether a commodity or a security?
And again, it depends on the facts and the law, and if there's a group of individuals...
I'm asking you about the facts and the law sitting in your seat and the judgment you are making.
And so, Mr. Chair, I think you would not want me to prejudge, because I'm also...
But you have prejudged on this. You've taken 50 enforcement actions. We're finding out as we go, as you file suit, as people get Wells notices on what is a security in your view, in your agency's view. I'm asking you a very simple question about the second largest digital asset. What is your view?
And my view is if there's a group of individuals in the middle that the public is...
All right, so let me just...
I won't keep going on, but you can see he just refuses to answer the question, and that's a position that he already made clear before he had his, higher ups, and he was hired as the chair to speak on his opinion of whether Ethereum was a security or commodity. I don't want this video to get too lengthy, but I really can't find a way to end it without covering some of the advancements that have been happening with Chainlink. Every video I include some, and there's always really exciting ones, but this one's just enormous. It's really just communicating and bringing out to the public what's been happening behind the scenes for years. And I've talked in the past about CCIP. That's the cooperative program that was developed with Chainlink and Swift. It stands for Cross-Chain Interoperability Protocol. And it's a language and messaging protocol that allows smart contracts to communicate and send messages and make transactions and make transfers, okay? Now, I won't go into the details of that more, but DTCC and Chainlink completed recently a pilot to accelerate fund tokenization with JP Morgan, Templeton, BNY Mellon, all participating and more, okay? Now, the main two participants of this pilot were the DTCC and Chainlink with all these other partners. Okay, now, if you're not familiar with the DTCC, we'll ask our handy Google, what is the DTCC? It's a US-based financial services company that provides clearing and settlement services for financial markets. The DTCC is responsible for trillions of dollars in securities transactions each day. The DTCC's role is to help markets grow, protect the financial system, and reduce risk. The DTCC does this by automating, centralizing, standardizing, streamlining, settling transactions between buyers and sellers of securities, protecting the integrity of the global financial markets, creating efficiency, and reducing costs. So, add this up. The DTCC is enormous. We get that, trillions of dollars per day. It deals with transacting on securities, and what better function, what better partnership could you have than Chainlink? Chainlink, that's exactly what it's designed to do all those things, but do it in a more efficient way because it's done with blockchains. And that is the really giant paradigm shift for the traditional financial system to be put onto blockchains. And that's in the form of what we've talked about before, what are called real world assets. It just means taking an asset, like taking a hedge fund, and making a tokenized version that lives on a private blockchain for that fund, okay? And the reason why that's important is because there's a lot of things that can be done. That fund can be fractionalized and sold as securities, as each fraction of the fund. It can be all transactions and settlements will be extremely more efficient, right? We're talking about that. We're talking about reducing costs, creating efficiencies. So using the old archaic systems, replace those with blockchain technology. And the only way that can be accomplished is by the technologies that Chainlink has developed. And I mean, we're talking not small partnerships, right? We're talking enormous institutions, enormous global institutions realizing Chainlink is the only one that can offer this kind of system, this kind of technology. And to further get an idea of like how big this is, just in 2022, DTCC's subsidiaries processed $2.5 quadrillion in security transactions, and its depository subsidiary held securities issued valued at $72 trillion. I mean, if that doesn't imply, if that doesn't guarantee the success of Chainlink, I don't know what does. And these are all the other partners that DTCC and Chainlink decided to participate in, right? So you have Edward Jones, you have BNY Mellon. These are large institutions, right? So BNY Mellon, $48-50 trillion in assets under management. And BNY Mellon is, I believe it's the oldest bank in the United States. It's the world's largest custodian bank and security services company, and manages and moves nearly 20% of the world's investable assets. State Street, globally in over 100 different markets and employs more than 46,000 people, $42 trillion assets under management. And this is not a case where you often have some crypto project claim they have a partnership with some other large, well-known entity to kind of get good marketing, and in reality, all they did was get on a phone call, okay? This is not just Chainlink marketing this. You have the DTCC highlighting their work with Chainlink in their 2023 annual report. In their report, 2023 Wrapped, one of the key highlights they list is collaborated with Chainlink to explore token standardization as part of Swift's blockchain interoperability project. That interoperability project is CCIP. And in Deloitte's latest report, they were quoted as, CCIP was highlighted as a major innovation with the potential to transform interoperability. CCIP stands out as a robust solution to ensure security and reliability. I've owned Chainlink for 7 years now. I've followed Chainlink during that whole time. I've been a follower and believer in Sergey Nazarov, the co-founder of Chainlink, and I've seen slowly more and more people, more and more groups take notice of Chainlink. And I would see him get interviews with a lot of kind of more niche crypto outlets, crypto media, news outlets. And then, I remember it being excited that he was on MSNBC Africa. And now I just had my buddy tell me, I had already seen it, but he told me, hey, I was watching CNBC and I saw Sergey on there, right? I mean, these major steps, like, he's on the mainstream, Chainlink is mainstream, and here's him talking about that partnership, that pilot.
DTCC, Chainlink. So can you take us through how this collaboration all works and what exactly was the goal of this collaboration?
So I think this collaboration shows the trend towards fund tokenization, because this data is a critical part of administering a fund on chain. And so it shows that all of these large institutions, including and the DTCC as well, are going in this direction of basically putting more and more parts of a fund on chain. And that is a very important trend because the on-chain format for funds is a superior format in many ways.
You in the report, and how is this different than how the current financial system works?
So in the current financial system, all of that data needs to be emailed across many different groups, and the data only becomes available after days or weeks or months. Here, the data can be in an automated way generated by calculating it pretty much on the spot, and so it can be made available every minute rather than every week or every month, and that's pretty significant. There was a dimension here where the data can also go across different chains through CCIP, the cross-chain interoperability protocol that we work on at Chainlink. And the ability to move this data across chains is very important because all the banks, all the asset managers are basically in the process of launching their own chains. And they're going to want to use tokens and consume data from their own chain environment. But all those different chain environments need to be reliably connected. So that's one of the big things that we also work on. So I think the trend is clearly towards generating your own blockchain as a bank or an asset manager, putting assets and client accounts and forms of payment on that blockchain, and then exchanging that form of payment or client account money or stablecoin money for different assets on various chains. Is that all these different institutions are going to have their own chains. They're going to connect those chains, and they're going to execute transactions across those chains, and that's going to depend on the data within those transactions, and it's going to depend on the connection between those chains making the transaction possible, which are both things that Chainlink is heavily involved in across both the public chain DeFi world, where Chainlink is the standard already and powers over 60% of DeFi, and where we are now becoming the standard in the capital markets through work like this.
What else are you noticing? What tokenized products are getting the most attention? Is it real estate or carbon credits, for example?
So there's really two groups. There's core financial products like treasuries and money market funds that are being tokenized and used essentially as a form of collateral, whether that's off-chain or on-chain, but basically it's tokenizing core financial products that are at the very foundation of the financial system. And then there are net new assets, what people often call assets at the edges. And these are assets that have not been turned into securitized financial, but do exist in a tokenized form.
Now in March, BlackRock, the world's largest asset manager, entered the asset tokenization race by creating a new fund on the Ethereum network. So what does that signal to you?
That signals to me that the largest financial institutions see a market in the crypto industry. So the crypto industry, in my opinion, when it crossed 200 billion, got on an inescapable, inevitable trajectory to be a large global market that would continue to grow. It's now at over 2.5 trillion in value, and I personally think it could get to 10 trillion on the basis of consumer and retail and hedge fund demand. And I think that market is what large institutions like BlackRock are interested in with the BITO product. The remaining growth beyond 10 trillion for the crypto industry and the blockchain industry, I think will have to happen through all the value that's locked in traditional financial institutions. And that's where that process of them generating their own chain, putting those assets on chain, will take the crypto industry way past 10 trillion into the hundreds of trillions. So we're still kind of in the early to mid stage of the industry's development. But even at 2.5 trillion, it's big enough to justify the largest asset managers investing resources and building financial products for that market. So I think they're interested in that market, which is a very good sign because that market still has, I think, multiples of growth left.
Interesting. Now, in a recent...
So that was just part of Sergey's interview on CNBC. And I know it was a bit lengthy, but I always enjoy listening to him talk. A wealth of knowledge there, a lot of exciting developments going on, and I'm excited for the trajectory of Chainlink. I always have been, but it's awesome to see the giant scope of the project and giant scope of his ambitions for the company, and to see some of those steps being taken, some of those accomplishments really getting down the road, and even from here it's going to take time. I mean, the size and complexity of what Chainlink is trying to accomplish is to rework, to retool, to overhaul the whole way the traditional financial world operates. It's just an enormous ambition, and everything points to its success, but it still takes time, for us to see Chainlink reach what we care about, right? Prices, for us to see the prices of 3x, 300%, 500%, 1,000% from where we are. I believe those prices are definitely in our reach. I think they're very likely. It just may take a couple years, may take a few years. So I hope you enjoyed that update. I hope you're happy being a DeFi Gravity investor and being exposed to Ethereum and Chainlink and a few other assets as I am. And I hope you enjoyed this video. Look forward to talking to you soon. This is Zach for DeFi Gravity Investments.